You are listening to chartingwealth.com for Thursday, the 22nd of September, 2016. What did we tell you to watch for? Well, that was the Fed meeting on Wednesday. Did we tell you right? Yes, it had an impact on the market. We are still looking at a down market as far as the IYY, which is the iShares Dow Jones U.S. Total Market Index Fund. The market is still confirmed down. There was an up day today. The total market up 1.11%. But one up day does not mean that indeed the market has recovered. Still below the weekly trend line. We have broken and are above the two-day trend line. We have a candle. This is a two-day candle that actually has a wick on top, a green open box candle. Those of you who understand and know how to read our Heiken Ashi type candlesticks know what this means. It does mean there was a strong move up on the two-day candle. In fact, during the course of the two-day candle, the market actually went up about twice of where it finally settled out. Those of you who don't understand the Heiken Ashi candlesticks, they're different than your traditional candlesticks, Japanese candlesticks. I want you to go to our website and watch our video on Heiken Ashi candlesticks. You can also find it at our YouTube channel. You will learn a great deal about how effective these are. Now, this third candle represents 6 days of upward movement. A lot of up movement on the 15th, the candle ending on the 15th of September, a spinning top, which means indecision on the 19th, and of course, the candle that we have seen pop up on the candle ending on the 21st, that two-day candle is actually a green open box. It's the strongest up-moving candle that we have. We still don't have a crossover going up on the two-day chart. If we look at what happened intraday, you can see that there was up movement in the morning, followed by strong up movement in the afternoon. In fact, super strong up movement settled out lower than it had originally popped up to. But again, up 0.11%. Now, we are still in what we describe as a pullback on the 4-hour chart. Let's pay attention for the rest of the week and see if indeed this market continues to move up, or if this exuberance is short felt, and if we see the market roll back over and crossover going down on the 4-hour chart, paralleling the down move on the weekly and the daily chart, the weekly and the two-day chart, that, my friends, is your point to look for an entry in an inverse fund going down. Now, that's where we are on the total market. We're going to go back to our two-day chart. We're going to quickly look at the S&P 500 before going to the NASDAQ 100. S&P 500 also breached the two-day trend line. That has been broken. Still, though, in the negative, we still have the derivative oscillator in the negative and the MACD, although the signal line and the MACD are getting closer together, still very far apart. But they are converging, not diverging, as they were on the last candle. Although the MACD is moving sideways, the signal line is still moving down. And again, we have on the on the two-day candle for the 21st, what do we see going on? I would not call it necessarily a spinning top, but it does have some down movement on that candle, not nearly as strong as the total market. Now, if we look at the 4-hour chart, what do we see intraday? Well, the market was down at the end of the day on the 20th. That was Tuesday, but Wednesday up in the morning and up in the afternoon, but also with some down wick. So that's interesting to watch. Again, the pullback is under effect, so let's just continue to see if it rolls back over. If it does, a good opportunity for jumping in and following the downtrend. And I said if it does. Okay, and again, the S&P 500 up 1.12%. Now the Qs, the NASDAQ 100 up 0.98%, hasn't crossed over going up yet, but it is getting much closer than the other charts. Now, if you recall us talking about the weekly chart, do you remember? The weekly chart on the Qs is still in a confirmed up move. The two-day chart isn't a confirmed down move, but it is getting closer to crossing over going up. We have 3 strong up candles for the last 6 days of movement. The 2-day trend line was breached all the way back on the 15th of September. So pay attention to that. Let's look at what happened intraday. Well, again, the Qs has been in a confirmed up move on the 4-hour chart since the afternoon of the 15th. That was Thursday of the prior week. And then slid sideways going into the Fed meeting, up in the morning, up in the afternoon, again with a down wick also. So continue to watch. Nothing confirmed at this point. Now, lastly, we're going to go back to our 2-day chart, and we're going to take a look at gold, which was up the most for the day. Gold up 1.46%. Is that not interesting? When in the past, many times gold was the converse of what was going on with the market. If the market was up, gold was down. If gold was up, the market was down. Again, interesting. The market and gold up. Gold broke through its 2-day trend line with this latest candle. Has not yet broken over on the MACD, but the 2-day trend line has been broken. Let's take a look intraday and see what we see with gold. We see that gold crossed over strong in the morning, going up, and continued to move up. We told you to pay attention to this 4-hour chart. It has been working nicely for us recently. It's tough to get into strong up moves, though, when everything just blasts up at once. Gold did push through the 2-day trend line and closed well out of that on the 4-hour chart. That is where we are on gold. That is where we are on the Qs, the NASDAQ 100, as well as the S&P 500 and the total market. We so appreciate you being with us today. We hope you enjoy what we do here. We work hard trying to make it worth your while. We so like to hear from you. We appreciate all the nice things you say about us. If you would like to help us out, by all means, go to iTunes, subscribe to our podcast. You guys have made us as high as number 6 in the world regarding stock market podcast. Heck, we want to go to number 1. That happens if you subscribe, and that happens if you give us nice 5-star ratings and share our podcast with your friends. If you've not already signed up for our newsletter, you can go to the website, chartingwealth.com, and do that. We also would love to have you as a subscriber at the YouTube channel, where you can get our videos. And remember, we're here every day for you. The market is open. We are here helping analyze it, making it simple. When you do sign up for the newsletter at chartingwealth.com, guess what you get? You get 3 nice things. You get the charting layout we use at freestockcharts.com. The operative word there is free. Have we charged you for anything up to this point? No, we have not. You also get the How to Read a Stock Chart video. That is about 15 minutes of vital information you need. You'll get a link to that. Plus, you get the PDF for our daily market worksheet. We ask you to spend the 10 minutes we do this broadcast filling out that daily market worksheet, because that, putting pen to paper, is going to probably be the most valuable thing that you do as far as inculcating this knowledge and the way that you think. There is something magical about writing. That's why human beings have been doing it for thousands of years, and it makes such a different impact on your brain. So that's what we have to offer to you today. We so appreciate it. God bless you. We'll continue to follow this market. Let's see how things shake out over the next few days. All the best. God bless from chartingwealth.com.